Welcome to this podcast. We're going to discuss the IRS Offer and Compromise Program. I'm a CPA, a Circular 230 professional. I'm entitled to represent taxpayers in any of the 50 states in representation matters before the IRS. That's inclusive of tax notice, letters, audits, appeals, statutory notice of deficiency issues at all. But the Offer and Compromise Program is very, very popular, and about 250,000 taxpayers a year participate in it. Unfortunately, the majority of them are not successful, and I believe the reason the majority are not successful is they attempt to do it themselves, and it is complex. We'll get into it over this podcast and the next podcast or two, but it is a complex program in some ways. If you do it right, your chances of success are probably 80 or 90%. If you do it wrong, your chances of success are probably as little as 25%. So that's why representation, professional representation, such as a CPA, is extremely important. Now, I've written a book as well. You can buy it on Amazon and other platforms. It's called the IRS Tax Debt Survival Guide. It's a practical, plain English roadmap for taxpayers facing audits, notices, back taxes, liens, levies, or tax court proceedings. It provides clear explanations, real-world insight, step-by-step guidance. My firm's name is Tax Options LLC. It's a Wyoming LLC. You can just enter the keyword Tax Options LLC on Google or Bing, and my site will come up right away. I also, of course, have a YouTube channel with a variety of videos, and at the end of this presentation, I provide my email address. So let's discuss a most interesting topic, the Offer and Compromise Program, what it is and why most offers are rejected. Few IRS programs are as misunderstood or as aggressively marketed as the Offer and Compromise. To many taxpayers, an Offer and Compromise sounds like a government-approved settlement program that allows anyone with tax debt to settle for a certain percentage on the dollar. That belief is the reason most offers are rejected. The Offer and Compromise is not a negotiation tool. It is a structured, rule-based program designed to resolve cases where the IRS believes it cannot collect the full amount owed. Understanding the distinction is the difference between a viable offer and a wasted application. An Offer and Compromise allows a taxpayer to settle a tax debt for less than the full amount only when the IRS concludes that the full collection is unlikely or inappropriate. The IRS considers an OIC appropriate in three circumstances: doubt as to collectability, doubt as to liability, or effective tax administration. Each category has strict criteria. The IRS does not accept offers based on hardship alone or fairness or good faith. Doubt as to collectability is the most common OIC. This exists when the taxpayer's assets and income are insufficient to pay the full tax liability before the statute of limitations expires. This is the most frequently used and the most frequently misunderstood OIC category. The IRS evaluates mathematically according to very strict standards and Treasury regulations, which you have to delve into and understand: net realizable asset equity, monthly disposable income, future earning potential, and compliance history. Now, if the IRS believes it can collect the debt through enforcement or payment plans, the offer will be rejected, regardless of how burdensome collection may feel. Doubt as to liability is the second option. That's a narrow path. That applies when there's genuine dispute about whether the tax is actually owed. This is not an appeal of fairness or ability to pay. It requires evidence that the assessment's incorrect, factual area, and documentation, not argument. These offers are rare and highly technical. Finally, there's effective tax administration. This is the exception, not the rule. ETA applies when the tax is correctly owed. The taxpayer could technically pay it, but collection would create exceptional hardship or be inequitable. ETA offers are granted sparingly. They typically involve advanced age, serious illness, extraordinary circumstances, compelling equity considerations, and they require careful presentation and strong documentation. The majority of offers are rejected. Offers in compromise are rejected for predictable reasons. The IRS believes the taxpayer can pay more, financial disclosures overstate ability to pay, assets are undervalued or ignored, compliance is incomplete, or documentation is insufficient. Many offers fail not because the taxpayer is ineligible, but because the offer was poorly constructed. At the heart of every OIC decision is reasonable collection potential, which we'll get into in another podcast. But in summary, RCP represents what the IRS reasonably expects to collect through enforcement and payment over time. The IRS does not compare your offer to your balance due. It compares your offer to your reasonable collection potential. If your offer is less than RCP, it will almost certainly be rejected. Now, lump sum versus periodic payment offers, the structure of the offer matters. There are lump sum offers. They require 20% down with application. They use a shorter future income multiplier, normally 12, and they often result in lower offers. Then there are periodic payment offers. Choosing the wrong structure can double the offer amount. Compliance is the non-negotiable requirement. No OIC will be considered unless all required returns are filed, estimated payments are current, withholding is sufficient, and no new tax debt is accruing. Compliance failures are one of the most common reasons that offers fail, but these are avoidable. The timeline reality. Offers in compromise are slow. A typical OIC timeline includes pre-filing compliance cleanup, financial analysis and documentation, the application submission, IRS review, further requests from the IRS, decision or appeal. The total time is often 6 to 18 months, occasionally longer. Patience and planning are essential. Submitting an OIC carries risks. During review, the collection statute may be suspended, financial information is scrutinized, and enforcement may resume if rejected. An OIC should never be filed just to try it. It should only be filed when the numbers support it. When an offer in compromise makes sense, they're most viable when your income is limited, your assets are minimal or protected, the statute of limitations is advanced, hardship is well documented, and compliance is established. They are least viable when your income is very strong, when your financial disclosures are weak, or you're early in the collection cycle. Also, when assets create too much equity. So you should now understand that OICs are not negotiation tools. IRS math, not persuasion, controls outcomes. Most rejections are predictable. Structure and timing matter. How the IRS actually calculates an offer in compromise is somewhat complex. We'll cover it in the next podcast. This is where theory becomes numbers. Offers in compromise, by the way, involve financial modeling, procedural rules, strategic timing. In cases where approval hinges on interpretation rather than math, experienced representation often determines success or failure. So as I said, every offer in compromise is evaluated against reasonable collection potential. And the IRS is looking at the most it can reasonably expect to collect based on this number. And RCP, to summarize, consists of two components: net realizable equity and assets, and the future income the IRS believes it can collect. Your offer must generally equal or exceed RCP. And this is all detailed mathematics. You have to do so according to national standards. And everything is treated separately. There's special treatment for various asset valuations. It's a long process. It can be complex. You have to know treasury regulations, and you have to do it just right, and then you stand a very good chance. So my name is Jerry Greneau. I'll give you my cell phone number and my email address. My cell phone is area code 727-403-9559. That's a Florida cell phone number. My LLC is in Wyoming, but I live off the coast of Florida. And my email address is jtgreneau, my last name, at AOL.com. I'll spell that, JT Greenough, GRENOUGH, at AOL.com. I've written about 15 books. I wrote one for Thomson Reuters on federal auditing, a very highly technical book that was published years ago. It applies mostly to CFOs and CEOs of publicly held corporations. It doesn't apply too much to individual taxpayers, but it's a good Thomson Reuters book, protecting your company against civil and criminal liability. In any case, my current book, as I mentioned, is the IRS Tax Debt Survival Guide. It's a must-read. Thank you for listening. Stay in touch.